Hey, Glenn, let's talk about the Fed, because I think we were all kind of surprised by this move for them to move into bonds and bond ETFs to actually be buying those things. It makes people start to wonder, are they going to buy S&Ps? What do you think? What's happening here? Will the Fed do just about anything and everything?
Well, we're in uncharted territory, Becky. And one of the things we've heard a lot of talk about going into the risk of a Great Depression. One of the things that has happened in this cycle is that the lessons of the Great Depression, the public policy lessons, have been applied in the positive. We can talk maybe a little bit later on about unemployment, but with respect to the Fed's actions, the Fed is taking everything in its arsenal and inventing new actions to try to smooth the path for this pandemic and the subsequent recovery. One of the new features of it is to be buying in the corporate debt markets, which is a brand new piece of it, not just the two facilities you talked about, but also the Main Street facility. Those are, as I say, brand new things the Fed's doing. They represent innovations. We will see how they work. I think you quoted Krishna Guha earlier today, and I think he's a little bit wrong in what he said. Smart guy, but I would argue that what the Fed is doing is creating the capacity for companies that were previously investment grade and that don't have access to the markets today to get access to those markets. Hopefully that's a temporary measure. Hopefully it's bridge financing to the future, and we can have these markets stabilized, companies stabilized, and create the conditions for recovery. So I think it's all good. The one issue about it, though, it does get the Fed closer and closer to fiscal actions. To have the Fed actually picking individual companies or even individual ETFs to invest in is a brand new thing. That kind of picking winners and losers is something that's more, I think, correctly done by the fiscal authorities, by the Treasury, and by actions by the legislature. And I assume that's one of the things that Jay is going to be addressing today.
I agree. I hope that is something they address. Hey, Glenn, the other issue with the Fed, and this has been a running debate on the show, just what the Fed is doing, whether that's going to lead to a big backlash in terms of, again, thinking what everybody thought after 2008 is that the Fed bailed out Wall Street and Main Street got left behind. There is a real risk for that this time around, too. Is there any way to avoid that?
That's a good point. I think we've largely internalized since then that saving the banks is necessary to save the economy. But it still didn't stop the whole thing being stigmatized. One of the elements of the learnings from that is that these programs need to be fully disclosed. They need to have good governance in place. This is what the article I wrote with Gary Cohn in the Wall Street Journal was going at this. Can we create the conditions for reporting, governance, and transparency that can give people confidence that these things are being done in the right way? And I think and we're doing that at the Fed. That's something which I'm focused on. I'm determined to get right. I would also point out that the CARES Act was combined with a lot of individual relief, the PPP loans, the extended unemployment, the checks that were written to people, the help for the healthcare system. So it was paired with a lot of other activities that went directly to helping individual people or different kinds of institutions than just large companies and banks. So it's a very different set of circumstances, too.
It does seem like we have reached the end of coordination between the Democrats and the Republicans in terms of everyone being on the same page and saying that we should be spending amounts. We may have seen the last of the bills that have been passed in terms of saying we're all voting for this unanimously. Now the Democrats have a big plan that they want to put together. The Republicans say no way. I think the exact quote on it was something like a liberal wish list of things they want to get accomplished. So what happens if there is no longer the fiscal money that's coming in to help this out?
I think that you need to distinguish between political theater and actual actions being taken. Even when the 2 or 3 CARES Act facilities were being negotiated, there was still political theater going on simultaneously. And so that's a lot of what's going on here now. Don't forget, we're in a political election season, hotly contested presidential elections. So that's going to continue. But I do think it's probably not wrong. So it was important to act very, very quickly to stop the raging bull from rampaging through the economy with the first 3 actions really, and then the action by the Fed. It's probably not wrong now to take a pause, look at what's happened, and understand where we should go next. As in connection with that, there's an interesting piece of analysis up on the Brookings website now by a demographer by the name of William Frey, who says that the virus is now heading toward what he calls Trump country, heading toward the middle part of the country. And that all of the declines are in New York and New Jersey. You take that out of the mix, the virus incidence is increasing in parts of the country that haven't seen it before. So that suggests that as New York and New Jersey and the Northeast begins to decline, you could actually see significant economic problems growing in other parts of the country, which means we will need greater relief for them than we have now. And that will create a different set of economic politics around it. And that also suggests to me why we need to have something that looks more like automatic stabilizers, where we shouldn't just have one set of shocks here with our economic policy and then wait and see what happens. We should have economic policy that turns on and turns off based upon how bad the situation is, in this case, unemployment. And then we don't have to kind of constantly be going back to, is it bad enough again to do something? Get a set of objective measures about unemployment and then turn on and off on unemployment insurance in those situations. Something that's done in Europe, particularly in Germany, very effectively.
Glenn, you're on the board of New York Presbyterian Hospital, so you've got a very good idea of how bad things are, at least on the front lines. I just wonder what you think about the efforts to try and open economies state by state, area by area, how concerned you are about it, or whether you think it's time to start doing some of these things.
Look, I think it's very much time to start doing it, but we need to do it in a careful way. And there was an event, it's up on the website again at Brookings yesterday, where a number of leading epidemiological modelers went through what their proposals for doing this. And there's some very interesting thoughts out there. But I do think it's time to be able to, not just because of the virus incidence, but because we have learned that the virus was able to be contained within the capacity of our treated within the capacity of our healthcare system. We didn't pierce that capacity. We also now are getting pretty steady supplies of PPE out there. Your previous guest from LabCorp, that's very encouraging. That's American companies meeting the needs of the company, so a country getting the testing out. So we're creating the circumstances under which people can go back to work. And I think you'll first see people who have high economic value, low transmission possibility going to work, and then that scaling up. So I think it's right to do it on a regional basis and company by company basis within the context of federal guidelines. So I think this is the right time to be talking about that.
Did you just have a cat or a dog walk in the room? What were you looking at off to the side there? Uh-oh. I think we just lost Glenn. We will have him back very soon. A lot of things we wanted to talk about with him, but Glenn Hutchins, again, giving us an update about what he's been seeing on some of the front lines. Next time we have him back, we'll talk a little bit about his concern about charities right now, because this is the time of year when a lot of companies would normally be doing things like 5Ks or other ways to raise money for charities. He's got some ideas. Oh, wait, he's back. Glenn, did you hear that?
I'm back. I did hear that, yeah.
Okay,
so when I was on, I think I heard what you said. When I was on last time, we talked about the domestic care package, which we created, distributing 135,000 in Harlem in the Bronx. And a lot of people asked how they could participate. So we've established a capacity for people companies listening to this, challenge their co-workers to go to this hashtag, and we'll arrange for you to be able to send care packages to frontline healthcare workers all across the country. And we hope you'll join with us to do that.